As you all know, back in the 40s, okay, several things happened. FDR put out a whole executive order stating that everybody that had gold had to, within a 1 month time frame, turn their gold in. And if they didn't, they were penalized $10,000. That's the equivalent of $180,000 in today's dollars after inflation. Keyword inflation. See, it got you there. And not only that, you could serve, if I'm not mistaken, up to 10 years in prison. But then shortly thereafter, okay, Franklin D. Roosevelt, FDR, made a trip over to the king of Saudi Arabia, okay, the Saudi king, and struck a deal because back then the United States of America had the greatest military. We had just won World War II. We were the dominant nation, which we still are. But I'm talking about when we were literally in the golden age, okay? Back then, we provided protection to Saudi Arabia in return for oil that they pumped and oil that they had being valued in US dollars. Hence, the petrodollar was born. And as many of you know, in the 70s, Nixon took us off the gold standard. So our actual dollars, these greenbacks, used to be valued by gold. Fort Knox, you guys have heard of that. It used to be valued by gold. But Nixon in the 70s took us off the gold standard, which meant then our dollars were only backed by the full faith and credit of the United States of America, which was still good enough for most of the world. Because why? Well, we had the reserve currency, which we still do today. I don't know for how much longer, but we do today. And today, like I mentioned earlier, I'll mention it again, 60% of all transactions worldwide are done in the US dollar. So that should give you some strength and some excitement, knowing that the US dollar is still the reigning champion, and it is still the petrodollar where most oil is valued in. However, that seems to be changing. So obviously the Saudis don't really care too much about protection from the US because they can get protection from who? Well, maybe Russia, protection from maybe China. They might not need protection from the US, but this isn't the first time the Saudis have said, we don't want oil valued in US dollars. And again, it comes down to control. The Saudis probably don't want to give up that much control, but I'm not here to talk to you about that. But I am here to talk to you about some of the things that are developing. As you all may know or have heard me say, the Fed, okay? The Fed's number one job is to protect the dollar. That's it. And if you don't know, the Fed is responsible for funding a lot of wars. Okay, so wars for countries or for the Fed, for the central bank, is a very profitable time. Now, that's not good. Okay, that's not good because you don't want the Fed to want to profit off of war. But the Fed's number one job is to protect the dollar. And the dollar is coming under fire. Because now with this deal that's going on, and you're seeing all the headlines. I don't care if it's India. I don't care who it is, but there's lots of other chatter out there. But we definitely know Russia. We definitely know India. We definitely know Brazil. We definitely know China are all trying to figure out ways to buy and trade oil under another currency. Right now, there are sanctions out against Russia. We can't buy Russian oil, and nor can European nations buy Russian oil because they've both said, nope, we're not going to support Russia. But all Russia does is sell oil to other countries. Like, let's just pick on India. It sells oil to India. India then mixes it with their oil, okay? And then they sell it on the open market. Or they sell the oil to someone else like China, or, you could just pick it up and it's mixed. Okay, it's blended. And then that blend is sold back to Europe and back to the US, but yet it's not Russian oil because it's really oil from Saudi Arabia. But the oil from Saudi Arabia, and I'm just making this up, it might not be Saudi oil, but India probably. Maybe they mix it with a blend, okay, of India oil. And now we're not buying oil from Russia, we're buying oil from India. But India bought the oil from Russia. Do you see what I'm saying? It's such a mess. It really is. So we sanctioned Russia, which pissed Putin off, okay, rightfully so. And we froze a whole bunch of US dollars. Why? Because, well, Russia used to trade a lot in US dollars and held a lot of US dollars. So we froze those. That made them mad. So now they're off on a vengeance to try to create their own currency that then could rival the dollar. And they pair up with China. And China does have a currency, but it's still pegged to the dollar. Everything's pegged to the dollar, but they're trying to break from that. So let's just say worst case, but it sure looks pretty likely. China invades Taiwan. Chances are the US will do the same thing they did to Russia to China. They will put sanctions out. They will freeze assets or do different things like that. And I can't remember, I think it's like $860 billion that China owns of US debt called treasury bonds, but they'd probably sanction things. Trade would halt between China and the US to some extent. And then all of a sudden, you'd probably have yourself in the midst of a war. Now, again, I said it earlier and I'm going to say it again. I don't really like the idea of the US going to war with China. I really don't. And I hope we never get there, because that then seems like it becomes a world war, because then you got Russia, you got China, you got India, and you got all the other allies of those nations. And then you got the US and our allies. Folks, if history provides the path from the past, if you really trace it forward and you watch Ray Dalio, it sure seems like this is the path that we're going to right now, and it's not good. But the best thing you can do is stop worrying about things you can't control and start worrying about things you can control. Start getting ready for what will probably be one of the biggest recessions of your lifetime. And when we go into this recession, I can tell you one of the things you do not want is debt. So it's time to really create your budget. It's time to look at your debts. It's time to stop spending money on foolish things. It's time, like Tyler Durden from Fight Club said it best. We work jobs we hate to buy things we don't need to impress people we don't even like. If you can't take the message out of what Tyler Durden from Fight Club said, then you've got other issues to deal with. Right now is the time to hunker down. It's time to cut back on some of the spending. It's time to thin out the debt, pay off the credit cards, work a little bit of extra overtime while you still can, because in the future, your job might be gone. Because during a recessionary period, and if you've been following what the Fed's been saying, the last leg of a three-legged stool is employment. Why are we not deep into a recession yet when we should be? Well, you're employed. We're all employed, because that third leg of the stool represents low unemployment. And the second we lose that is when we slip. That's right, folks. That is it. There's only one thing holding this entire economy up. There's only one thing keeping us from being deep into a recession, because we technically are in a recession, but we're not in a deep recession. And most of you don't feel like we're in a recession because you got a job. But when you don't have a job and your income gets cut down and you're only getting unemployment, if you get that, then are you going to be able to maintain those debts, those car payments, those equity line payments, all those lines of credit? Are you going to be able to maintain all those credit card payments? Chances are the answer is no. And if history should serve as any type of guide, every time during a recessionary period when people lose jobs, that's what sinks a family: debt. So you want the answer? Get out of debt.